my mentor always taught me the big three, right? The big three being, stocks, bonds, and real estate. Those are the big three things that my mentor always told me to invest into. Well, for the millennial, it's not just stocks, it's not just bonds, it's not just real estate, but it's now also cryptocurrency, it's digital assets, and with NFTs, the non-fungible tokens, those things I see having a really big impact in 10, 15 years, because unlike cryptocurrency, there's actually a very high utility and a very high purpose to owning an NFT, right? You're almost kind of like in a little club where if you buy this NFT, you belong to this club, and there's actually a lot of perks that come with owning that digital asset.
It is my pleasure to welcome Daniel Kwak. You've probably seen them on YouTube, the Kwak brothers. They've got a fantastic channel, and he is active in a whole bunch of areas of real estate. But today, we're going to focus on the millennial mindset and that impact on the economy in general, investments in general, and specifically the housing market. Daniel, welcome. How you doing?
I'm good. Thank you again, Jason, for being on our show. That was a fantastic hit. You did a great job. Our audience loved you. So I was actually looking through the comments this morning, and a lot of people were saying, man, this guy's a genius. I'm definitely going to go check out his stuff. So it was great success.
Well, tell your audience that flattery will get them everywhere.
That's right. That's right.
As the old saying goes. Hey, and you got caught in a snowstorm, so you are not in your gorgeous studio today. Next time we have you on, we'll have you from your studio, but we appreciate you just jumping on from the office here. Give us a little insight into the way millennials engage with money and investing. My view is that it's certainly an interesting crowd. A lot of millennials hit the Great Recession in their formative years. They saw their parents struggling. They saw their parents losing their houses. And I think it made them a pretty financially savvy group and a pretty frugal group. Is that correct? Are those perceptions accurate?
Yeah, I would say so. And when the Great Recession happened, I remember I was in high school. And I remember my teachers still to this day talking about how it ruined a lot of their financial planning and, a lot of their family members. I remember teachers actually being on the verge of tears as they were explaining to us what was happening.
Really?
I actually, my Spanish teacher, I still remember, she literally cried in front of the entire class talking about how her husband had lost pretty much half of their 401k because of this Great Recession. So, for us, our generation, you're absolutely right. We did witness a lot of things. And I think one of the things that a lot of investors don't talk about, because at the end of the day, it's very important to understand the millennial mindset, because it is going to be the big demand, 5, 10, 15, 20 years from now, right? In terms of what we're interested in, what our generation resonates with.
And so just to comment on that. So we're talking about 80 million people. This is the largest demographic cohort in American history. The baby boomers were huge and they changed everything, but that was only 76 million. Now, I know demographers will disagree slightly on these numbers, but I call it 80 and 76 million. That's what my data says. Then my generation, Gen X, we're like the lost generation. There's only 46 million in my little group. So, we didn't make much impact on the economy at all. So just by sheer numbers, It's a huge deal. The biggest
huge
ever,
deal,
right? Yeah.
I know. By the way, the generation right after us, Gen Z, I believe, is around the same size, if not larger.
Really big.
So what we're talking about is it's got a lot of implications and effects on how we're going to invest in 5, 10, and potentially even now. But to your point, Jason, you brought it up beautifully. Is for us, it did make us a little bit more frugal. We were the generation that really brought on this whole idea of minimalism, and how it's actually cool for you to not be tied down to a mansion or a mortgage. And it's actually more cool to be able to rent and have mobility and travel. And that's the things that our generation, for us, what we call a quote unquote flex, right? The things that we're proud of is we're happier going on more, trips and experiential things as opposed to having materialistic, mansions or, cool things, cool cars. That's actually what is more cool for our generation.
Yeah, and I agree with that. But, those experiential things have been severely limited with the COVID world, right?
Yeah, absolutely.
Yeah. So what do millennials think about that, and what have they been spending their money on instead? Buying
Yeah,
stuff?
for sure. Well, I mean, honestly, if you look at, my generation, so I'm part of a lot of different Reddit groups and Discord groups that talk about investing, and the average age demographic of a lot of these individuals in, these Reddit communities and is probably around like the mid 30s, right? A lot of people in their 30s. And when I talk to my buddies who are in their 50s and 60s about investing, every single one of them wants to talk about real estate, and it's real estate and then it's stocks and then it's bonds. Anytime I have a conversation about investing with a buddy of mine who's in their 20s and 30s, it's always about cryptocurrency. It's always about NFTs. It's always about, kind of these newer things, these newer fads that have come the last 10, 15 years. So, I mean, in terms of what millennials are in spending money on slash investing, I think it is very different when it comes to generations.
Sure, sure. Now that you mentioned that, talk for a moment, if you would. And I don't know if you followed this story or have any interest at all, but meme stocks. I'm still blown away by, the AMC and the GameStop and all of that stuff. And that seemed very much millennial driven. I think I'm correct about that.
Yeah. Yeah, I mean, it was it was crazy. I did a YouTube video about AMC and what's going on, and the short selling, right? Of what the subreddit group Wall Street Bets, what they did. Which, by the way, I am actually a proud member of that Reddit community. Not necessarily, and I didn't necessarily get involved with the short selling of the AM. Like I didn't buy any AMC stock or anything like that. But I did pay very close attention, and I did monitor a lot of the comments in that subreddit group. If you think about meme stocks, it doesn't just stop there. There's also, meme crypto coin. I did a video on our YouTube channel on Shiba Inu, and Shiba Inu there's no utility to it, right? I mean, no one's saying, hey, you could exchange Shiba Inu for a basket of fruit at Target. There's no really purpose to it, but it just is more so of demand, right? Is, hey, this is what's cool and this is what's trendy, which when I grew up studying in finance and investments, that was never the thing, right? It was never about, hey, let's just buy this meme coin because other people are doing it and it's because it's super trendy and it's cool, right? There was usually some news and some data that backed up the reasoning for the mass movement of capital towards that particular asset. But with as much as people try to understand it, it's just so unpredictable. I've tried understanding it for months now of what drives millennials, what drives people to buy meme stock, or what makes a stock a meme or whatnot. But I got to be honest, Jason, I have no means and ways of figuring that out. I do have a friend who made, I think, about $6 or $7 million off the whole GameStop thing. And the irony was that, the people who made a lot of money, as soon as it hit top, they sold out. And a lot of people who kind of had FOMO and bought it maybe a little too late lost a lot of money. So I have friends who both made a lot of money and who, both lost a lot of money. But again, it's a lot of just communication. I think when it comes to millennials, and this is probably my last point I'll make with this concept of meme stocks and meme coins, is, we're the really first generation to kind of live in a world and henceforth invest in a world where the internet is such a mass appeal. There was no subreddit group in 1985 or 1991 or 92. There was no online Discord community or anything like that. So I think even just the conversation and topic of what does it look like to have hundreds of thousands and even millions of people in an online forum, and everybody is talking about, hey, let's all buy into this, or this is the thing, or that's the thing. I think that's something that historians, finance historians will write about 30, 40, 50 years from now, is the psychology of the millennial investor, considering that we're the first generation to be really integrated with the internet and investing in it and living in it, and therefore, doing everything that we do in it.
Sure, sure. So minimalism, meme stocks, impacted by the Great Recession, all of this stuff. Where does that leave us? Like, what can investors do to align their investment strategy with all this millennial money that's moving through the economy, but especially going to be moving through the economy in the future? And I don't want to miss one important point here, Daniel, and that is the point of the wealth transfer that will eventually happen as the inheritance issue occurs. And, millennials have been kind of known as complainers, right? And they have some reasonable gripes,
Yeah.
and the hey boomer meme and all of that stuff, right? But, those boomer parents of theirs are going to pass that wealth on eventually. How do you see all of this playing out? And I know some of that may be in the distant future, but
Yeah, no, I think that's a great question, which, the whole okay boomer, right? That whole thing, I grew up in a culture where, you respect your elders, and for those that are listening to the podcast, Jason and I necessarily don't look alike, right? I'm South Korean. I immigrated to the United States from South Korea. And so for me, I grew up in a culture where, you always respect your elders, right? Which, maybe that's the reason why I'm in real estate, right? But I think in terms of the future and where that leaves us, especially when, the millennial generation starts becoming the generation where, hey, like we are the main market movers, we are the ones in the 40s and 50s that have a lot of, capital and resources and bandwidth to make shifts in the economy. And a lot of the psychological effects of what we're doing now is going to have a huge effect of when we're in our 40s, 50s, and 60s. So for me personally,
well, you're already in your 40s. Just so you know, the oldest millennial now is about 41. So
right, no, that's exactly right.
Millennials are not kids anymore, folks.
Right, and I'm 27, and I know I'm kind of in the last.
You're the youngest millennial, yeah.
Right, I'm one of the youngest millennials for sure. So I think 10, 15 years from now, when the millennials are kind of in our prime, especially of investing, for me personally, I foresee an investment world and an investment market where there's so much more options in terms of what people invest in terms of the mainstream. When I was learning up and coming up in the finance space and in the investing world, which in many ways I still am, my mentor always taught me the big three, right? The big three being stocks, bonds, and real estate. Those are the big three things that my mentor always told me you invest into. Well, for the millennial, it's not just stocks, it's not just bonds, it's not just real estate, but it's now also cryptocurrency, it's digital assets, and with NFTs, the non-fungible tokens, those things I see having a really big impact in 10, 15 years, because unlike cryptocurrency, there's actually a very high utility and a very high purpose to owning an NFT, right? You're almost kind of like in a little club where if you buy this NFT, you belong to this club, and there's actually a lot of perks that come with owning that digital asset. Very similar to how if somebody.
What kind of perks? Tell us about that.
Yeah, so I was actually having a conversation with a buddy of mine yesterday who was very big into NFTs, and he was actually one of those guys 2 years ago where he's like, dude, I'm telling you, this NFT thing is going to be really big. So he bought a week ago. He bought an NFT that was actually released by Disney. So he bought a Disney associated NFT. And he was telling me stories of how Disney's coming out with these perks of, if you go to the park, you get a discount, and there's special member areas for people who hold NFTs. There's certain events for NFT holders that are associated with Disney. I know, I believe there was a Spider-Man NFT that came out, recently, and there's going to be, perks associated with that. And, I've got a friend of mine who owns what's known as a Bored Ape. So a Bored Ape is one of the most notorious, most well-known series of NFTs. And he's telling me, yep, there's celebrities who own these NFTs, and these NFT community members have access to member-only parties, networking events, and I mean, really, if you think about it, the asset and the way is different, but the psychology of it is the same. If you think about the mentality of 20, 30, 40 years ago, driving down the road, driving a Lexus, there's reason why people drive a Lexus or a BMW is because they're communicating something about themselves to other people. And for me, I really see, this whole concept of an NFT as something similar to brand association 30, 40 years ago. It's just that with this one, it's not necessarily tangible. You can't touch it, you can't see it. It's just something that you own digitally.
Yeah. The NFT thing at first, I thought, are you kidding me? This is the biggest hoax ever. But, I can see there's more to it than that for sure. But
yeah,
when someone's spending millions of dollars on a JPEG, I don't know, that
right.
just blows my mind.
Right. For me, it's my opinion, because I'm a little kind of in the middle where I when it comes to investing and things I learn about, I'm very old fashioned. I love real estate. I love the things that's been around for thousands and thousands of years. But a friend of mine was having a discussion with me, and my opinion is it kind of, based on my research, it kind of reminds me of what happened in the dot-com bubble
Yeah.
when,
Yeah,
people
but
were.
that was the key word was bubble.
That's exactly right. So, I told my buddy of mine, he's like, I don't know, I wouldn't be surprised if this NFT thing ends up being a bubble. And, the strong projects survive, kind of like how back in the dot-com bubble, not every, project survived, but some did, some didn't. A lot of companies were just throwing money at organizations that did stuff in the internet.
Right.
I think for me, I'm seeing a lot of similar patterns.
Yeah, yeah, couldn't agree more. Okay, so transfer of wealth, inheritance, what will millennials do with this money? I don't know that the minimalism thing is going to last. For example, these baby boomer parents, when they pass down their McMansions, are the millennials just going to liquidate them because they don't want the McMansions? Or are they going to move in and enjoy them? It seems like that almost goes counter to this sort of millennial idea. It's bad for the environment, costs too much money to heat and cool those houses and maintain them and so forth. But I don't know, the houses exist. They're not going to be blown up. They're not going to go away. I sort of wonder how that's going to play out.
Yeah, and that's something that I've wondered as well. Because on one hand, I do think that no one's going to tear down these McMansions, or there's always going to be a buyer for big houses and nice things. That space is always going to be there. But on the other hand, my wife and I, we do pretty well financially, and yet we still live in a 3-bedroom apartment. We still rent. And our cars are nothing to be excited about, and for her and I, the reason why we like renting is because we like the idea of not having to maintain a house. And we like the idea that this, our apartment complex has amenities like a sauna, a really nice gym, a tennis court, a pool. So for us personally, for my wife and I, and a lot of our friends who are still renting at the late 20s, early 30s, and they can certainly afford a home, but they still choose to rent. For that, I'm not so sure. A part of me, thinks that with all these McMansions, perhaps a lot of millennial buyers will buy these McMansions and then convert them into co-living spaces. I know that's a strategy in real estate that's been taking off recently.
I've been thinking about that. And are you referring to, one of the tech companies that's doing that? I can't think of the name. I just talked to them last week, actually, because I was sort of investigating what they're up to. PadSplit.
Yeah.
Are you referring to that when you say that?
Yeah. And there's actually a lot of retail investors that are doing that as well. I've got a friend of mine who is kind of the face of this large platform known as Bigger Pockets in real estate. Yep. And, I have another friend of mine who was recently the cover of their magazine, and his main repertoire and his main strategy was all about co-living. And I think he's got about, 8 or 9 houses that he's doing this with in the Washington area. And he's crushing it. I mean, I think he's cash flowing, somewhere around $3,000.
So he's renting, when you say that co-living, he's renting rooms individually, right?
Yes. Yeah. So he'll buy like a 5-bedroom house and rent them by the room.
Yeah. But the thing they're doing is they're actually telling you to get rid of all the common areas except the kitchen, basically. They're telling you to take the living room and turn it into 2 bedrooms. It's crazy. And I think, they got to have major like zoning law problems with that, and complaints about not enough parking per bedroom, because most cities say, for each bedroom, you got to have a parking space, for example, right? Or you've got to have some multiplier like that. So I don't know. I think there's going to be a lot of resistance for that type of stuff. But what do you think?
Yeah, and I think so too. The reason why I didn't certainly get into that strategy was just because of the amount of liability that I think that I would have to, keep up with. I mean, imagine having 6 or 7, 8 strangers living under the same roof.
Yeah, a lot of management.
A lot of management, and for me, again, I'm a little bit more old school in the way I like to invest on behalf of my investors. And I don't know, for me personally, I don't see that being a good stewardship of, the capital that investors put into my company, putting them in a position where we have to potentially deal with a lot of liabilities and setbacks and zoning laws and kind of like what you said. So I think a lot of things are up in the air.
Yeah, I think they are too, and it's going to be interesting to see how the world unfolds. And we're going to get you back for another interview real soon, and you'll be in your studio, and we can talk about a whole bunch more issues that is on the table that we've discussed. So really great having you on. Of course, everybody can find you on YouTube. Do you want to give that a website too?
Yeah, I mean, if people want to go to the kwakbrothers.com, I'll actually even give my personal email address because Jason, as you know, I'm a big fan of your show and I appreciate you coming on our YouTube channel. So my email is daniel@thekwakbrothers.com. So if anybody even just wants to say hi, if there's anything that I can do to help serve them and be of value to them, I'm always looking to help. So.
All right, Daniel, thanks so much and happy investing to you.
That's all right. Likewise.